It looks like oil prices have already spiked to sky-high levels and will hardly continue growing. However, their rally may well continue. Oil prices are rising and are currently hovering at 7-year highs. The quotes have already broken through the peak of 2018 and hit the highest levels since October 2014. It can be seen that oil prices have entered overbought territory. The price bubble is growing but is not going to burst. This can be attributed to Europe's energy crisis. The region is bracing for a tough winter. Moreover, the rest of the world is likely to face power shortages as well. All signs are pointing to a looming energy crisis in Asian countries, especially in China. In such a situation, an increase in oil prices is fairly logical. The only question is how far they can go up. Brent oil futures continue to hit record highs, rising above the peaks of previous years. The benchmark has almost come close to 86.71, the highest level of 2018. Market sentiment is still bullish. If the market reacts to such factors as overbought status, local highs and the resistance area, Brent crude will most likely enter a long-awaited technical correction. Otherwise, the quote will continue to gain in value, especially if it breaks through the level of $86.71 per barrel. In this case, Brent crude may well jump to the level of 2014. As for WTI crude futures, the situation is similar. Despite the overbought status, investors continue to drive the price of oil up. The quote has already overcome the psychological level of $80 per barrel, the highest level since late 2014. From a technical point of view, the US benchmark is expected to make a pullback and enter a technical correction. If this does not happen in the near future, WTI crude will most likely extend gains. In the meantime, the situation in the foreign exchange market is rather mixed. The Russian currency has been gaining in value for several months, while the currencies of other states have been losing ground. The end of the previous week was marked by a sharp increase in the value of the Russian ruble. On Friday, the currency tried to decline but then returned to local highs. Its correction is long overdue, but the Russian ruble continues to conquer new peaks thanks to the severe energy shortage in Europe and trading excitement over crude oil prices. Besides, the currency is being supported by the growing Moscow Exchange Index. It's also edging higher, setting new all-time records. The dollar-ruble pair is still moving around 71.55, the local low of June 11. The pair has entered oversold territory and is likely to make a rebound. Traders are now trying to trade the pair carefully. If the price breaks through and fixes below 71.50, the ruble will extend gains. Otherwise, a rebound is possible. Speaking of the euro-ruble pair, the European currency continues to trade in a downtrend. The pair is currently moving around the levels of 2020. The trading instrument is extremely oversold. Such a prolonged drop in the rate may turn into technical correction. This may happen at any moment, analysts note. Trading excitement over the run-up in crude oil prices and the cost of energy resources continues to fuel the markets. As long as there are no signs of a possible decline in the oil market, the quotes will most likely continue to hit new record highs. And that's all for now. Thank you for watching and stay tuned.